Broadcast. Welcome to the Zaner MarketCast, episode number 38. Your one and only spot to keep up with all of the agricultural market news. Today, we have a special Christmas Zaner MarketCast where Dan and I are going to sing and have a dancing number to get everybody ready for the holiday week ahead. Isn't that right, Dan?
Yeah, I missed that memo, but I'm ready for anything, Joe.
You look like you're ready for anything. I can't sing. I bet you could dance, though, if we had to do it.
I can throw down a nice jive here or there, but I wouldn't call myself, a rockette over here.
Where is over here?
Yeah, I'm actually wintering in Naples, Florida right now.
Very fancy.
My wife is on the tail end of her maternity leave, and we decided to jet set away from the dark, dreary, blue-gray skies of Chicago for the warm sun of Florida. And man, we caught a heat wave down here. It's been 80 plus and sunny every day. Not to brag, but can't ask for more.
Here in the Midwest, we caught our white Christmas today, Friday before Christmas. It was gorgeous. I don't think that it has lasted. I'm sure it's pretty much melted everywhere, but it looked good while we had it. But I think that might be the last shot for a white Christmas or white holiday week that we have coming up.
And on that note too, we haven't had much of that snow yet this year, right? This is more of a La Nina winter so far. A little bit that snowpack and precipitation hasn't been as high. We'll see if that carries through into the new year. But yeah, I guess it's the weathermen and climate or meteorologists have been warning us, right, of this, the fact that it may not be a white Christmas this year. It's looking like it.
Yeah, right. How about if we just jump right in Friday? Maybe you got a couple presents to buy yet. Folks want us maybe to keep this one short. We'll do our best. If you don't mind, I'll start with the weekly update. March beans open the week 993 3/4, high 999 1/2, low. Get this number. Keep this one in your head. 947 was the low, sub 950. Last trade 979 3/4. That was down 15 1/4 on the week, but certainly nowhere near that 947 low. Funds are short 87,000 contracts. Dan, all the spaghetti is still overhead. 10-day 986, 18-day 990, 50-day 1003 3/4. And then my notes here, I have China, 1.25 million metric tons. Where do you want to jump in?
So, we've had some pretty good demand, right? We've seen export sales to Colombia, to China, to unknown destinations, I think I might have caught a Spain in there this week too. It's impressive to see this demand situation. I do want to point out it's not record demand and it's not the fastest pace for exports that we've seen, but it is on par with some of those, more stronger years. And if that curve continues, there's no reason to think that those USDA numbers aren't going to continue to pull through for demand on the demand side of things.
This China number, Sinograin, with the two purchases they announced earlier this morning. The only place I saw that, I didn't look too many places, admittedly, but I saw Hightower reference it.
Hightower referenced it this morning.
The guess is that those are U.S. beans, drier and more fit for stockpile purchases. What do you think about the technical situation?
The big C word comes to mind, right? Has the market finally capitulated, breaking that contract low since August? I mean, we sat here, we spent the last 3 months talking about it. Finally, we had that momentous move below a 25 cent down day 2 days ago. Brutal down day, right? And then a snapback rally here. I do want to caution some of that very hyped up bullishness that entered the market today, that we are just returning right back where we came and have yet to close back over and establish back over those old contract lows. So the market spent one very heavy volume day going down, several heavy volume days going down and two decent volume days coming back up. And we are still below that level, still below the 18-day, and still really below that major line in the sand that you and I were talking about before the broadcast, $10 in soybeans. That since November 15th-ish, the Ides of November, we've been below. I'm not saying we can't clamber back above, but in many markets that saw volatility this week, the S&P, gold, silver, natural gas, crude oil, I mean, literally, you name it, there was volatility out there. Most markets saw recovery today. Christmas is coming early. Santa Claus is bringing gifts, perhaps. But genuinely speaking, I am a little concerned that haven't established ourselves back above levels that reverse that entire downside move yet. But this is a great start. 35 cents, 30, 40 cents off the lows is an incredible thing to talk about right now on a Friday.
And I think we would be remiss if we didn't mention funds are short 87,000 contracts.
Yes.
That's a lot, right? So that's a lot. And probably
that's the estimates coming in today, correct?
For today, for this morning, right? And you would expect that maybe there was some short. I think that there was some talk that open interest had increased. And so
sure.
I want to go back and double check that before I talk about it on the podcast. But open interest is going to send the signal. What my point is that if they continue to cover that short position, my feeling is that fund short was very profitable 2 days ago and much less so now. And if they begin to chew into those moving averages, 986, 990, could be that your funds are going to be forced to cover that position because they're very uncomfortable, they're profitable, and you're going into the end of the year. And so,
and from a technical perspective, right, they have a reason to worry about this low on the chart. I mean, it's not a key reversal, but it's certainly a 2-day reversal that is going to turn heads. And they're not willing to stick around in a losing position. They want to garnish those profits, fatten their end of year bonus here too. I'm sure there's reason to think that there's maybe fund activity going into the holidays.
But even with that, I start to look out and say, okay, what's the fundamental that brings this, and we always say, and I've said a couple times today, if you bring 8 of us into a room or get 8 of us onto this podcast, we can all, without taking a breath, say why beans are so bearish. It's just simple mathematics. There's a lot of beans and potentially a lot of beans coming up out of South America. So when everybody's so bearish, you're not surprised to see these breakneck reversals. And there are some opportunities to market there. But my bigger question is what is the next fundamental to maintain a rally? If we're going to get out and stay over 10, or we're going to go to 1050 or try to knock on the door at 11, what is it that makes that happen? And Dan, I just can't see what that would be. Can you?
No, I mean, domestic demand is incredibly predictable. Obviously, there's a change of the proverbial guard in Washington going on. So some of those new things, some of those demand questions, you've heard already about the Trump administration, maybe, and this is more corn thing, but doing away with ethanol mandates, all these things. That's all hot air and smoke. But truthfully, crush demand in the U.S. is pretty stagnant and predictable, and even Chinese demand is pretty predictable. And the thing I fear the most is, Chinese demand has been strong for U.S. beans, but it's been stronger for Brazilian beans. They're up over 10% on their demand in South America this year. That's not something to ignore. China's just buying more everywhere, right? And I also have to caution, here that exports aren't exports, in my opinion, and so they're really on a boat and shipped. There's still cancellations between now and March that can happen, and we'll have to be getting ourselves into now, the next planting season on the back of, maybe a drier winter. And I mentioned that weather before, but it's way too soon to be calling it for a weather market. Way too soon. So we got a few cycles to get through where Chinese demand can slow down. End of year in February for China, and then of course, right around then, you have that massive Brazilian crop that's going to hit the market. And until we see a weather event down there, unfortunately, we have to be thinking that fundamentally more bearish tune, unless the demand picture continues to pick up and stay strong. I mean, if demand is the reason the bulls are screaming today, then it's got to be the reason they need to continue screaming tomorrow.
And what you mentioned applies the same to corn. Corn export demand has been rather robust, but those are export commitments. And we would be wise to monitor and see that those export commitments turn into export shipments, right?
Absolutely.
Open the week at 441.
And there's no reason they can't.
No, absolutely. Open the week at 441.25. The high was 447.5. Low was 435.75 in March corn. Last trade 446. That's up 4 on the week. Not sure. Technically, funds are long about 148,000 contracts, which is sizable. Back above the moving average, corn market, March corn squarely eyeballing 450.25, which is the 200-day moving average, appears to be gathering strength. What I wrote down here is resilience. This corn market just can't break, can it?
No, it can't. Impressive rally today off that 18-day moving average. and that spaghetti of support that we've had down between 440 and 430. Now we're getting back above and trying to push above that, a little bull flag trend line against the highs. Still got that resistance above it, the 200-day around 451, the old October highs around 452. A triple top there, I don't really believe is a good reason to be a seller in corn. You almost think the technical picture might need a little bit of a burst to the upside, but I am worried that any kind of move to that upside, 460 to 465, you're running right into that major downward sloping trend line that's been true since August of 23. We held that trend line in June over the summer months, and we need to break above that level to get back above the old contract lows from earlier this year in February that we broke through in the summer months. So we've really been consolidating below that area on the chart, and I'm fearful that if it doesn't break above and stay above those levels, this is all part of a larger corrective pattern higher in the corn. But I do think in the near term, the path of least resistance is probably still higher. And interestingly enough, we've had almost the opposite opinion on the beans because of its consolidation. But needless to say, I mean, I know how the chart's been building gradually and slowly here, with swing highs and lows being higher highs and higher lows in the corn over the last couple months.
Tale of two cities with that spaghetti
very
underneath overhead for beans, underneath for corn has provided support. Market has not really been able to get down and break through those moving averages, which is the hallmark of a market that is on a move higher. And in beans, now we're going to see what that market's made of as those moving averages will offer resistance. I wonder, would you agree that those two technical points you just mentioned might be real good places for guys with a lot of corn to think about maybe doing some marketing? Because you could move the physical if you've got decent basis out there, and then turn around if you feel strongly about it. It's easy to re-own. Give me an idea. Just a quick one. We don't want to get too far afield here, but just a quick idea, real world example of how we might re-own corn over those levels. You get into some resistance there. It takes a break. You sell 5,000 bushels. What do you do there?
I mean, obviously owning the call is the simple and least dynamic solution of all. Finite risk to the downside. Your reownership has a strike level that above becomes good and you reown that corn, and anything below, you've effectively just paid for the right in that insurance policy to protect the upside, right? It's the opposite of insurance. Insurance is a terrible word, but the idea that a payment giving you protection here for better price discovery or a higher price is what we're talking about. There's certainly other strategies we can look at that might fit your plan a little bit more dynamically, selling calls to represent future ownership, or even buying a future with a put and a synthetic strategy to help manage the risk. But in all of these instances, covering your risk or making sure you have finite risk is kind of key to that reownership plan, because, hey, you already owned it once. You don't need to own it, without that downside risk again.
Gives guys an emotional buffer, makes it easier to make that cash sale, put that money in the bank, and then turn around. And if you feel strongly about it, you can spend anywhere from 10 to 15 cents, likely depending on the strike that you choose, depending on how far out you want to go. And so it is very cost effective to capture that potential upside. Am I right?
Yeah, it is. And, particularly for corn where volatility has been really tight lately, some of those options are relatively cheaper than when the market starts to move and becomes a little more volatile. Volatility can be measured to the upside as well. And if we're looking for a market to break out of a range, we also have some really interesting levels to structure strikes at for this exact type of opportunity.
And it makes sense then to look at some of this reownership in anticipation of sales made down the road, because as the market moves higher, if you get more volatility, it could be that these options get more expensive. And so this could be kind of a timely issue where getting some stuff covered now gives you the opportunity to make sales easier down the road.
Right. And what you just described is, in essence, and referred to as that courage call. You spend the money today to have that ownership. You take the courage to own that or own it now. And all it is that it, gives you that flexibility and ease to do that cash sale here in a few weeks, a month, whenever you feel best and the price is right. And you don't feel like you have to hold on to those bushels because you've got a strategy already in place.
That protects you to the upside.
Correct.
How about wheat? Opened the week 556 3/4. High was 569 1/4. Low 551 1/4. Last trade 552 and a quarter.
Mm-hmm.
Down 5 on the week. I don't know. Funds are short. 77,000 contracts. My notes say new lows, open interest going up. Sell wheat, live in a mansion.
Yeah, like the beans, it was one of those charts that kind of looked like it needed to take out the lows yet again. I know last week at least it did for a bit there. And now, you have a little bit of non-confirmation though with the KC and the spring wheat not making those new contract lows along the Chicago contract here in the near term. But generally speaking, it's been in a pretty stiff downtrend. And you like to see something come in and change that now that we've broken below, that cold contract low around 540 in the March wheat. Very similar to beans that kind of need to capitulate and go down, hit those levels. Now we have. Today was a bit of a doji, right? Unchanged on the day, but it does not, end the downtrend that we've been stuck inside of the clear channel resistance that has held up above. And now that spaghetti of, moving averages above.
Fundamentally, Russian wheat contract never, Russian wheat crop never going to be good again. They're having trouble. It's the worst it's ever been. And you would think that the market would take some momentum or some change in momentum from that, but not even a little bit.
Yeah. And that's where if you can't rally on bullish news, man, you really gotta wonder. And that's kind of how I was feeling. Not to get back to the beans, but the beans a few days ago, you had all this strong demand, all these export sales, and yet we were down 25 cents. It's nice to see today we had a snapback reversal, but boy, wheat was left out of the party today.
We're going to have to wait a little while for that to happen in wheat, maybe. How about cattle? Feb cattle opened the week at 192.22 and a half. High was 193.22 and a half. Low 186. That's important. And a quarter. Last trade 188, 52 and a half, down 350. How about that swing low on the chart, which I believe is 184.50? I saw the Hightower guys referencing like a 185 monthly low that they thought once we cross that, then your funds who are heavily long cattle, I don't know what the number is, but I know it's big. Once they take out that 184.40, we could be back on the downside again rather abruptly.
And hopefully we'll have the chart up there so you guys can see this. There has been a very strong downward sloping trend line on the Feb fat cattle chart, actually all the fat cattle charts, but the Feb, what we're referencing here in the near term. And, we unfortunately kind of had a head fake move here to start December above that. And, the last 2 days have clambered back below it and are now back into that old consolidative range, finding the 200-day kind of as support, but the 18-day moving average now is resistance. Feeders have not broken down as much, but they are certainly back to testing below their 18-day moving average as well. And, much lower here, below the lows of the month, and they could slip right back down to their 200-day or that old downward sloping trend line that they broke out of a month and a half ago that fats hadn't really followed through. We thought they were getting a follow through here into December, but that entire move has been erased. I'm cautious that also on the back of maybe more bird flu headlines, which, by the way, the severe case in Arkansas that I believe it's our Louisiana, happened to be an elderly individual with pre-existing conditions. So I hate to see anybody getting sick from a disease, but it's also good to see on the other side of that coin that it doesn't seem to be a threat to the majority of the population yet again. However, how that affects our livestock and poultry markets, that's a little different, right? On 2 events this year, we've seen H1N1 become an event that caused cattle markets to sell off. I'm not saying it will again, but hey, those headlines are rearing up again. It is the season for fowl to be having moved south, and a lot of those Texan and southern states that keep livestock herds are at threat now of some of those things again. I will point out, outside of that head fake, if the market can get back above those levels and reestablish, boy, cattle markets still do look strong, and maybe all-time highs and the highs of this contract highs are yet again in the works.
Yeah, feels kind of like we won't have to ask that question for very long, one way or another.
Agreed.
It's going to go, and and it could be that some of this weakness had to do with the stock market sell-off. Felt like there was a bit of a risk off across the board post FOMC. but we'll see
And
next week maybe.
that's where there's actually a resilience in cattle right now. I was shocked to not see more red on the board for cattle prices here when we were, I'd watched the Dow drop almost 1,000 points, the Nasdaq 700 and the S&P, what was it, 200 or something, just a couple days ago. So I'm surprised that they held up in the face of all of that volatility and that massive risk off move that shocked a lot of other markets, at the same time.
Felt to me like the cattle market caught. I wouldn't necessarily call it a break because I think it was a significant logistical challenge with this Mexican screwworm situation. They've got facilities in place now. They're inspecting, and so we'll see how that plays out. But I wonder what happens. You have to talk about broader economic strength in order for this meat to continue to find a home. You have to talk about export strength in order for a lot of these cuts to continue to find a home. And so we'll see. I still feel like maybe the cattle market is precarious, but if it can hang in here, that's going to be a great thing.
And I'll tell you what, Joe and I always joke about Texas Roadhouse indicator for cattle and beef consumption. I actually, for one of the first nights down here, we went to a Texas Roadhouse, my wife and I, for their Wednesday $15 sirloin night. Now, I don't know how they can get away with selling you a plate of sirloin for $15, but I'll tell you what, I had a great time. That restaurant was packed. So I think consumer demand is still there, right? People love red meat. That's not going anywhere. And actually, I will placate this. Maybe RFK and the Trump administration end up being bullish for red meat because of some of the stances that like RFK Jr. have on the paleo diet and eating red meat and tallow. I'm not saying that, there isn't a trend there, but I think there is a public shift. And certainly we haven't seen the Beyond Meat and all those other fake meat products take off. People still want red meat on their table. And I don't know if that's going anywhere.
Just let me go on record yet again. American beef is a superfood. It's the more people.
I know a certain gentleman in this conversation agreed with all of that.
You know
right?
how I feel about that. American beef is a superfood. And so I'm going to jump up and down on this table in a minute. I think the more people that come to that realization, the healthier this country is going to be.
It's seeming like a tide is turned and people are starting to pay attention. Well, we've got some news stories this week. I'll kick it off here with, unfortunately, the one that is I think really grinding everyone's gears, that Trump, Vance, and Trump, Vance, and Musk pressed to kill the overall federal spending bill, risking aid to farmers. Chris Clayton from BTN brings us a story.
Did you almost just say President Musk out loud?
President Musk, yeah,
Did you just say the quiet part?
Right. I actually kind of like the guy, but the insinuation that he is president is a little far stretched too.
Could be. Yep.
But you have to admit that there is some interesting changes going on, and the shakeup that's happening in Washington has become a thing. Less than a day after details were released, the entire funding bill for the federal government and nearly $31 billion in disaster and economic relief aid to farmers appeared to fall apart on Wednesday because President-elect Donald Trump and Vice President-elect J.D. Vance and their advisor Elon Musk want to kill the overall bill. In a statement, Trump and Vance said Republicans want to support our farmers, pay for disaster relief, and set our country up for success in 2025. The only way to do that is with the temporary funding bill without Democrat giveaways combined with an increase in debt ceiling. Anything else is a betrayal of our country. I can't disagree with that statement at all. The current funding bill expires at 12:01 a.m. Saturday, December 21st, raising the likelihood that there will be a government shutdown and unless some immediate actions are taken. As agricultural economists and accountants were crunching the numbers on economic aid payments to farmers, Republicans took to social media and conservative news outlets to bash the bill. The Freedom Caucus described the whole bill as cramdibus, the CR bill. The group of lawmakers complained that the bill had $100 billion in spending without offsets that was negotiated behind closed doors. The Freedom Caucus wanted votes on separate provisions, including a vote on the DOGE Act that would not cut all non-defense spending 13% to pre-COVID 2019 levels. But mid-afternoon Wednesday, political news outlets on Capitol Hill were reporting that House Speaker Mike Johnson was looking to drop much of the disaster aid and pass a more stripped-down continuing resolution or a cleaner CR bill. The bill provides $20.78 billion to help producers with disaster losses over the past 2 years. The breakdown for some major crops look like this: corn at $43.80 an acre, soybeans at $30.61 an acre, wheat at $31.80 per acre. Now let me repeat those for you. Corn at 43.8 cents per acre is the current $3.80 an acre. Soybeans at $30.61 an acre, and wheat at $31.80 an acre. Those payments would be subject to $125,000 payment limits that could go up to $250,000 for producers who receive 75% or more of their gross income for farming, which I'm fairly certain are most of our viewers. The bill also provides an extension of the current farm bill through September 30th of 2025. While people clamored on social media, farm groups keep telling their members to back the bill. The National Corn Growers Association and American Soybean Association cited their support for the bill. The American Farm Bureau Federation stated that its members had sent nearly 13,000 messages to lawmakers calling on them to pass the CR with economic aid to farmers. Now, no doubt, we need to do what we can to support farmers and the robustness of the GDP of this country with this aid bill. And it's unfortunate that it's getting littered in with a whole bunch of other not political nonsense.
So much
In my
garbage.
opinion, the simplest thing that Congress could do is one bill for one thing. This should be its own bill. Disaster relief for farmers should be its own thing away from anything else, and it shouldn't be dog-eared in with the rest of this political nonsense. It's unfortunate.
Both sides of the aisle,
this is where
I
we find
blame.
ourselves.
You know what I mean?
100%.
Both sides of the aisle.
100%.
Don't say that you're for ag and then drop kick this bill with over to the other side of the aisle, or bundle this bill in with a bunch of nonsense that Elon Musk is going to kill. Yep. Separate this farm bill out, get it done. Same thing with the sustainable airline fuel. There is absolutely no reason for anybody from the USDA to go on television and talk about their legacy when they let this sustainable airline fuel thing languish for years now. I mean,
kicking the can. And unfortunately, when they do that, right, it gets jumbled in with all this other nonsense because they don't take the time to treat it like its own legislation, bill, whatever, and actually work on that as a thing. It's unfortunate.
Not long after the first story, we've got the second story. House votes down funding ag relief bill Trump backs. Chris Clayton from DTN says the House voted down a funding bill on Thursday evening, even after President-elect Donald Trump declared his support for the new package. House rejected the bill, a continuing resolution on a 174 to 235 vote, substantial. The bill would have funded the federal government through mid-March and provided needed disaster aid and economic assistance for farmers. Trump had declared his support for the new package after some tweaks, including suspension of the federal debt limit until 2027. 38 Republicans joined 197 Democrats to vote against the bill in a 235 to 174 vote. Just 2 Democrats backed the bill with 172 Republicans. Federal government risks shutting down at 12:01 a.m. on Saturday without a new funding bill in place. The trimmed down continuing resolution still included a major disaster aid package. The new version of the bill maintained $30.78 billion in aid to farmers for both natural disasters and economic challenges. The bill also extended the 2018 Farm Bill through the end of September 2025. Among the key provisions cut from the larger bill, however, was the provision to allow year-round 15% ethanol blends. Nonsense. Ethanol groups had praised the inclusion in the earlier bill. It's unclear why it was dropped. Overall, the bill would have the federal government operating through mid-March. That would give the incoming Trump administration time to weigh in on fiscal 2025 spending and potential cuts. The new version of the bill was significantly smaller than the original. What about?
I saw the 1,500 pages versus the 100 or so.
What about no debt limit? I get a little nervous about that.
Yeah, okay, right, and it's through 2027, so it takes you through a few years. I don't like that. Again, if this was supposed to be a bill just to get us through till March, what are they dealing with debt limits till 2027 for? Why are they worrying about all these other things that like ethanol blends for the whole year? Just get things going until March. I mean, I'm happy that they got the $30.78 billion, of disaster and farm aid relief back in there and didn't have to trim that down. But again, right, why then go and cut the ethanol blend I mean, if you're not giving farmers a direct payment of 30 billion, you're undercutting the price of corn by removing that and hurting their bottom line anyway. So it's just, it's clear that people are writing these bills and that are doing the dog earing have no clue what the economics of the farmer involve. And that's a sad reality that we have to deal with, it looks like.
If something doesn't change, I think they're going to get a real good idea what that economic reality looks like.
Yeah, agreed.
How about a question of the week?
What has Carter tainted us with today?
You are not going to believe this.
Oh, boy.
You are not going to believe this. But if you could star in a reality TV show, which one would it be?
Any of them?
I guess so. What is reality TV? I don't even know what he's talking about. You know what I mean?
And you know what? I'll comment on that first because I had a very brief stint on a reality TV show in Chicago. It was the Chicago version of Jerseylicious. They were looking for extras on it to come get their hair cut. And I went with a friend of mine and we made it on for a brief second. Well, let me tell you, there is not much in reality TV that is unscripted or actually real. Everything is a set up, generic type of situation where they expect to get a certain scene shot and have a certain kind of conversation. Things might be ad-libbed and not directly scripted, but believe you me, everything was, produced and coordinated as if it were a scripted show, right? So that's my comment on reality TV. But I think one of the shows I've always was and grew up watching and kind of wished I had a shot to be on was Survivor. I always thought that was just cool. Throw people on an island, figure it out. The last guy standing wins. I thought that was a cool one that I would want to be on.
I can't remember the last time I
think
watched.
I'd crush it too. I don't know.
I think you would do a good job. Heck yeah. I can't remember the last reality TV show I watched, and that's going to be the case for a long time.
That's a point of pride there, Joe.
But my daughter, what up is my daughter is a fiend. Like she's addicted to the reality TV show. I think it's Big Brother, right? Where they get in there and they do all the, this person backs that person and these people are against
rat or whatever.
Yeah, exactly. She loves that show. So if I could get on that show just to get her attention, you know how dads and daughters are, whatever I could do to get her to pay attention to me for more than 20 minutes at a time when she needs money would be great. But that's what it would be, Big Brother. But I have no idea how they do it, but I would go on there and figure it out.
Yeah.
Reality
TV.
Well,
Merry Christmas and happy holidays to everybody.
Merry Christmas, happy holidays.
Have a wonderful time with your friends and families. Are we back next week for this? Or are we taking a week off? Do we know?
I don't know if we're going to be back next week to do this again. Yeah, we may, or it's possible. Yeah, we'll.
And in case we don't see you, we'll see you next year.
Yeah, right. One way or the other.
But thanks for listening to the Zaner MarketCast today. If you need more just because you can't get enough of us, and who can? You can always follow us on Facebook at Zaner Ag Hedge, on Twitter, and in LinkedIn at the Zaner Group. If you have a question you like answered on the show, there's a link for you to do that in the description below. And you can follow the instructions to get it answered right here on air. Thank you again. Be sure to like, comment, and listen to, and follow the podcast and not miss a beat. And we'll be back with you as price action develops.
Merry Christmas. Happy holidays, everybody.